What's the full form of Paytm? Is it A, pay to me? Is it B, pay to merchant? Is it C, pay through mobile? Waiting for option D. Which law says that there have to be 4 options? Hey folks, CA Rachana Ranade here and I welcome you all to a very important video in our series of analyzing the meltdowns. Today we are going to discuss about the meltdown of Paytm, and just for your information, Paytm is nothing but pay through mobile. Paytm was founded in the year 2010 by Mr. Vijay Shekhar Sharma under the name 197 Communications. Initially, it started as a recharge platform typically for mobiles and DTH. Later, they ventured into loads of other segments which we are going to discuss later. It also offers microloans to its customers and to its merchants. In 2017, they crossed an amazing benchmark of 10 crore app downloads and it became India's first payment app to do so. But Paytm has achieved this amazing landmark. What about us? Even today on our channel, there are almost 41% people who are just viewing our channel and not hitting the subscribe button. So don't forget to hit the subscribe button and also hit the bell icon. Now let's analyze the financial performance of Paytm on a year-on-year basis. So here you can see we have financial year 2021 and here we have financial year 21-22. If you see revenue from operations, all in all the percentage change is 77%. In simple words, their revenue has increased by 77% if I compare it with the previous year. If I compare the expenses, here you can see the subtotal, you can see that the expenses have increased by 60%. So is there an increase? Yes, but now if you compare carefully, the percentage increase in expenses is a little bit less as compared to percentage increase in income. So if this be so, is this a positive sign for the company or negative sign? Answer is obviously it's a positive sign for the company. But what about the operating income or the operating loss? Here you can see that in absolute terms the operating loss has definitely increased, and even if you see about profit and loss before exceptional items and tax, here also in absolute terms the loss has increased. Now instead of looking only at the financial parameters, if I go to other indicators as well, something like GMV. By the way, GMV is something like gross merchandise value. Is it similar to sales? Yes, but GMV doesn't include any discount. So GMV typically is always higher as compared to sales. So here you can see that GMV, there's a 111% increase YOY. Merchant transactions have also increased. Total transactions have increased. MTU, now what is MTU? It's monthly transacting users. Well, they have also increased. If you see registered merchants, that also you can see from 21.1 millions, they have gone up to 26.7 millions. Number of loans disbursed, do you remember I talked about micro loans being disbursed to customers and to their merchants? They have also increased at 478%. You might be like, oh my god, that's a huge jump. But also understand that this base itself is pretty low, right? All in all, you can see that all the numbers are very good. They are in an increasing trend. Here also, if you can see, average number of sales employees, those have also increased at almost 190%. Now, this you can correlate to the previous slide wherein we had talked about profit and loss. Here you can see all expenses, if you are checking out, only employee benefit expenses is the one which has increased by more than 100%, and that's what is also exactly reflected in this very figure. So all in all, if you ask me, as to Rachana, how do you perceive the financial indicators and other indicators? To be honest, I believe that yes, I can see some positive signs for both these parameters. Now, in fact, management was also asked that what do you feel, when would you come to an operating profitability level? Because if you remember right now, they are at a loss at the operating level also. So, management in their Q4 commentary has mentioned that we believe by the Q2 of FY 2023, we might achieve operating profitability. And for that, they have mentioned that you can also look at two important points. Number one, there is an increase in the contribution margin, and number two, they say that they can surely see the slowdown in the growth of indirect expenses. Now let's get started with analyzing the actual meltdown. Just have a look at this chart. Since day one of listing, oh my god, it has crashed by almost 75%. In fact, on day one of listing itself, just look at that big red candle. It was a meltdown of almost 27% on day one. So what happened on day one? One of the renowned international brokerage firm, Macquarie, gave a report wherein they said that our target price for this stock is around 1200 rupees, which was almost 44% lower than the IPO price. In fact, if you see, the listing price was around 1950, the low point was around 510, and today as I shoot the video, that is on 11th of July, the price is somewhere around 700 rupees. But then what could be the first trigger point for such a heavy downfall? I believe the first reason is high valuation at the time of IPO itself. Now the company is a loss-making company, we have already talked about that, so we can't talk about the PE ratio. But can we talk about PS ratio? PS is price to sales ratio. So if you check out these figures, revenue as on 30th of June, so this is the Q1 data that I'm talking about, it's around 890 crores. Now 3 months data is pointing out to 890 crores of revenue. Then if I were to extrapolate that for 12 months, how much? That comes up to 3,563 crore rupees of total expected revenue for one full year. How much are the number of shares post IPO? Number of shares are around 64 crores. Now with this data, I can easily calculate the price to sales, which comes up to 39.12. Now big question is, 39.12 price to sales is higher or is it lower or is it fairly valued? For that, I'll have to compare it with the peers. But if you look at the RHP, it very clearly mentions that we have no listed peers. You will be able to understand that neither PhonePe nor Google Pay, none of them is listed. So there are no listed peers, very logical. But there are any other listed peers globally. For that, we have two data points here. PayPal is listed and Pioneer Global Inc. is also listed. So for them, the price to sales ratio is just 5.2 and 2.5, and right now we saw for Paytm it was 39.12. Can I very easily say that as compared to its global peers, it is definitely highly valued. Now if you were to check the price to sales ratio for Paytm on the lowest price, which was 510, at that day also price to sales was 6.65, and today as I shoot the video, the price to sales ratio is almost 9. Now if you say 9 or 6.65 is still close to PayPal, which is 5.2, but please make a note of this, PayPal is a profit making company, right? Now if I were to do a little bit of reverse calculation, that if it does come down, if Paytm comes down to the level of 5.2 price to sales, or for Pioneer which was 2.5, if Paytm were come down to 2.5, what could be the expected prices for Paytm? Expected only based on price to sales ratio, right? The expected prices could be 398 rupees and 191 rupees. Oh my god, is this way too lower than the current market price? Answer is again yes. So I hope you have understood this price to sales ratio. But there is one more important ratio, and what is that? Views to likes ratio. And for our channel, it's terribly low. So if you want to increase it, just smash the like button. Let's move on to the second reason for the downfall. I believe that it is also because of the weak financial parameters. If you have a look at this chart, which talks about the cash flow from operating activities, you can see that from financial year 2015 till financial year 2022, continuously their cash flow from operating activities has been in negative. But on the flip side, you can see that if I'm checking out financial year 2019 to financial year 2022, their cash flow from operations has gone down from negative 4,400 crores to negative only 1,200 crores. So there is an improvement for sure. Now the second reason, if you remember, I have already talked about this, is their increased losses in the financial year 2021-22. What about other financial ratios? For that, have a look at this. You can see that every single ratio that I have mentioned on the screen is almost in minus. Why? Reason is very simple. You can see that the first, all these ratios, whatever ratios you can see on the screen, first 5 ratios talk about profit. So PBDIT, so profit before depreciation interest tax margin, profit before interest tax margin, profit before tax margin, net profit margin, all have one single common word, and that is profit. And unfortunately, company is not in profit. That is the reason you see all these are in minus figures. Also, whatever return on capital employed, ROCE, be it ROE, be it ROA, all these figures are in minus, because again the word is return on capital employed, return on equity. So they have to be in minus, right? Plus the asset turnover ratio is also okay, not amazing. So I hope you have understood all in all reason number 2 of the downfall. Now that we have discussed various financial parameters, now let's move on to the non-financial parameters. I believe that the company has too many things on the platter, so that the focus is not only on a single business vertical. Why am I saying so? Have a look at this chart. Here you can see that starting 2012 till the latest 2021 data that we have, they have entered into so many different businesses. So if I were to still divide it into three major categories, the first category can be a payment services category. They launched their payment gateway in 2012. In 2014, they introduced Paytm wallet. Then they came up with bill payments. In 2019, they also introduced a soundbox. I'm sure you might have visited any shop wherein they say, Paytm pe itne rupaye prapt hue. That is a sound box, right? So all in all, they have entered into Paytm services in a big way. Then they also introduced commerce and cloud services. Under that, what all things come up? So here you can see 2015 movie ticketing, 2016 flight ticketing, then they went into event ticketing, then they went into Paytm First Games, and so on and so forth. Then you can also see that they have also ventured into financial services, wherein in 2017 they came up with Paytm Payment Bank, they came up with Paytm Gold, they came up with Fastag, Paytm Money, Merchant Cash Advance, if you remember the micro loans that we talked about. So all in all, if you see here, too many verticals are being chased by this company. Now for that, few people might counter that why, what is the problem? See, Ambani's, so Reliance is also chasing too many verticals. Tata's, they are also chasing so many verticals, then why not this company? So I believe that Tata's and Ambani's, they have been doing this business for such a long time, and over the period of last whatever 50, 60, 70 years or more than that, they have introduced newer and newer verticals slowly and steadily. This Paytm is a case where in barely one decade, so many things are being packed up, and that is the reason I believe can be one more reason for the downfall. Now let's move on to the fourth reason of this downfall, which was about ban on onboarding new customers by Paytm Payments Bank. Now why did this happen? In March 2022, RBI imposed a ban on Paytm Payment Bank for onboarding new customers. The reason that RBI mentioned that they said we found certain technical glitches in the system. RBI said that until and unless we get a clean report by the IT auditors wherein they state that the technical glitch has now been resolved, till then, Paytm Payment Bank, you will not be allowed to onboard new customers. Is this the first instance which has happened for the bank? The answer is no. In June 2018, there was another instance wherein RBI had certain observations about the KYC process as well. So this instance was the second instance per se. When management was asked about the same in the Q4 con call, management said that okay, currently agreed we are unable to onboard new customers, but we believe that this will be solved in another 3 to 5 months. But very important point, they have mentioned that there is no impact on the existing customers. When a question was asked about onboarding new customers, they said even people need to understand this. As far as new customers are concerned, we will not be able to open any current account or saving account, or we will not also be able to open a new Paytm wallet for these people. But if a customer downloads the Paytm app and wants to do a transaction through the UPI route, he will be allowed to do so. So you need to understand certain nitty-gritties as well before you jump up to any conclusion. I hope you have understood this fourth reason for the downfall as well, but I want you all to tell me in the comment section which reason out of these four do you believe is the primary reason for the downfall. Now let's have a look at the technical analysis for this chart. Here you can see clearly a double bottom formation that has happened on the chart. The lower point is somewhere around 514 rupees. So that is where the stock has taken a support twice. What about the resistance level? Here you can see that is on 14th of March, it saw a high price of 719. A similar high price of 719 was seen on 12th of April, followed by also 13th of April. Here you can see somewhere around 27th June, then 28th June. Again on 30th June, similar levels of 719 were also challenged, and today, that is on 11th June, again this price of 719 was challenged. That is the high price that we have seen today. Right now it's somewhere around 708. So clearly we can see 719, 720 is the resistance zone, is the choking zone. What about second resistance level? Here you can see that there was a big gap down, and this is the second point of resistance. It's around 770 levels. What about a weekly chart scenario? On the weekly charts, you can see that from the high level, again that is of course the listing day, since that it has just crashed down like anything, but right now you can see that yes, the stock is in a consolidation. Now if it were to bounce back from the consolidation, question is till what level? So for that I can just try to draw a Fibonacci level from this to this lowest point level, and here you can see with this in place, The first level comes up to 855, that is where we can see another resistance, and one more resistance you can see at 1066. Now, does this fall in sync with some report? So yes, JP Morgan recently came up with a report on 7th of June 2022 wherein they have given a target price for this stock at 1000 rupees, which is very close to our Fibonacci level of almost 1065 rupees. Now let's understand about the latest news or latest announcement by the company which talks about the operating performance for Q1 FY 2023. Let's talk about key 3 to 4 parameters. The very first one is total loan disbursed. There is a YOY growth of 492%. As far as the total loan value is considered, there is again a growth of 779% on a YOY basis. Even if you check out the average monthly transacting users, that is MTU, you can see that the number has increased by 49% YOY on their Paytm Super app. And if I'm talking about GMV, that is a gross merchandise value payments, here also there is an increase of almost 101% on a YOY basis. So all in all, I hope you have understood that as far as the financials of the company are concerned, yes, there are clear-cut signs of revival, and that point was also proven by the latest update which I just discussed with you right now. Then where is the big pain point? I believe the biggest pain point is the price to sales valuation. The company valuation at the current date is also pretty high. I'll tell you, this pain definitely hits harder when the overall market condition is also not that great. So if we see Nifty moving on to higher and higher levels, if the overall mood of the market improves, in that case, there is a chance that the stock might see a reversal. I hope you have enjoyed this video number 3 in the Analyzing Meltdown series. If you want to know more about the meltdown of RBL, you can click here. And if you want to know more about the meltdown of Zomato, you can click here. Till then, take care. Jai Hind and bye-bye.